you're looking for a blue-chip tech stock with unstoppable growth, you cannot afford to ignore Microsoft today, and here's why. Microsoft has been at the forefront of AI and cloud computing, and according to my secret formula, the stock could go up 42% in the next 2.5 years. Microsoft as a company is worth nearly $3.2 trillion, which would be enough to afford at least one house in California in this economy. The stock trades at around $430 per share, which will be important for later. Analysts expect Microsoft's revenue to grow at 14.2% per year over the next 3.5 years, with profits expected to grow at about the same rate. This is actually quite strong growth. For context, over the past 5 years, Microsoft's revenue grew at about 14.3% per year, and earnings grew at 20% per year. In terms of the stock's valuation, Microsoft has averaged a 31-time forward PE multiple over the past 5 years, but today trades at over 33 times earnings. We'll use a 30-time PE multiple in our valuation, which is slightly lower than the stock trades today. This doesn't make Microsoft overvalued. 3.5 years from now, analysts estimate that Microsoft will earn $20.10 in earnings per share, so at a 30-time price-to-earnings multiple, the stock could be worth $603 per share in 2.5 years. And of course, we can't forget the extra $8 per share the stock would make in dividends, which brings our total fair value to $611 per share. Is that good? This implies that Microsoft could see a total return of about 42% over the next 2.5 years, which would be a 15% annual return. This is a pretty nice return considering the stock market has averaged around 10% annual returns over the long run. Analysts have a price target of about $509 per share for Microsoft, so they aren't quite as bullish, but they still think the stock has over 10% upside today. The thing about this company is